You know that shrinking feeling in your wallet lately? Yeah, you know what I'm talking about. And it's not just you that's paying more for gas and eggs. No, the wealthy are too. But they're in on a secret about inflation. You see, it makes them richer while leaving everybody else with little bit lint and loose change in their pockets. So I'm about to expose their secret. I was homeless until I learned this. And I'm talking about going from can I afford extra guac to I own the avocado farm, from do I even have a retirement fund to hey, when's my next vacation? You ready? Let's go. This is the cheat code of cheat codes for using inflation to get rich. And I imagine that the wealthy wouldn't be too excited to learn that I was sharing this publicly because they need a lot of people in the dark for this to work for them. I'll break it down in 8 steps for you, from the most basic steps that might not even feel like a secret to the more advanced steps that'll show up for you like, damn, is that how it really works? Step 1. The good old emergency fund. Because before we start using inflation to make it rain, let's make sure we've got an umbrella. There's some risk involved, and sometimes the results, they're not immediate. So let's not take these next steps with reckless abandon. Stash away enough for an emergency, like 6 months of living expenses, 12 if that's gonna make you feel more comfortable, but anything more is really overkill. It's like bringing a chainsaw to a knife fight. Next thing, do you have a job or do you do gig work? Because that brings me to step 2. You wanna write short-term contracts for long-term gains. Keep your contracts short and sweet, because as inflation rises, you want the ability to renegotiate your rate down the road. Conversely, if you hire contractors, think long-term with contracts. Take advantage of the inflation hardship to lock your vendors into today's prices. If you like the idea of paying lower prices in the future, smack that like button like it's the snooze alarm on Monday. And sleeping in on Mondays, by the way, can be done guilt-free after you hear steps 5 and 7. But let me ask you this. Are you feeling today like your money is becoming worth less and less, like every day? Well, guess what? It is. Because inflation causes businesses to raise their prices. So if you own a business, and you should, even if it's a very small one, don't be shy, raise those prices. That's step 3. Hike those prices like you're trekking up Mount Everest. If inflation is going up, so are your prices. You know, I just paid more for a large French fry in the McDonald's drive-thru yesterday than I did for the whole Big Mac value meal just a year ago. There's no room to be romantic about the past. Imagine if McDonald's clung to their prices from the 90s or even just the 2000s or the 2010s. They'd be handing out those fries with a side of bankruptcy papers. Your business isn't a charity. Nostalgia, it might be priceless, but your products and services aren't. All right, are you ready for the fun stuff? Step 4, swap assets. Sell your depreciating assets, like that rust bucket of a car or the jet skis collecting dust, or do some industrial spring cleaning in the garage and funnel it all into appreciating income-producing assets. Think dividend stocks, or my favorite, rental property. Basically trade your rubber ducks for golden geese. Convert your lazy assets into working ones. Why should they get to take a nap when they could be out there grinding with you? By the way, if you want your friends and family in on these secrets, share this video with them and help me make financial literacy go viral. And speaking of those golden geese, let's move to step 5. Leverage the losers. Now, debt might send shivers down most spines, especially in shaky economic waters. But here's the plot twist. Inflation doesn't pick sides. So the ball's in your court. Will you stash away your cash like the average Joe, only to watch inflation just gobble it up? Or will you borrow like the rich, letting inflation feast on someone else's dime? Welcome to the ultimate inflation hack playbook. Borrowing that swiftly depreciating asset, like cash, to grab swiftly appreciating assets, like real estate. Put your good credit score to work. Secure assets that age gracefully like a bottle of 82 Bordeaux, while that debt and its pesky interest curdle faster than last week's milk in the sun. I've said real estate a couple of times. Have you ever wondered what else is there that benefits from inflation like real estate? Well, that's step 6. Invest in inflation-indexed funds, sometimes known as real return funds. It's like your money's wearing an invisibility cloak, shielded from the evil clutches of inflation. These funds primarily invest in securities, Treasury inflation protected securities, or TIPS. The main attraction here is they automatically adjust for inflation. Pretty neat, huh? Now, their track record, it's solid. But like all magic tricks, sometimes things aren't what they seem. For example, 1, I'm a little bit of a cynic when it comes to real inflation numbers versus what's reported. And 2, I prefer the control that I get with step 7. Buy real assets for real profits. Assets like gold, silver, commodities, and of course, more real estate. So first, gold and silver, often dubbed safe haven assets. These precious metals have been humanity's go-to inflation hedge for centuries. And here's why. Their value doesn't rely on any one country's economy, which means when paper currencies are sinking faster than a ship with holes, gold and silver tend to shine bright. Second, commodities, from oil to coffee beans. These are tangible items that have intrinsic value. As inflation drives up the price of goods and services, the underlying commodities also often increase in price. By investing in them, you're not just betting on the commodity itself, but on the fact that people will always need these basic goods. And that brings me to the one thing that no one can do without, unless, shelter somehow goes out of fashion. That's right, real estate. It checks a lot of boxes when using inflation to build wealth, and it's the ultimate in intrinsic value. And as they say, they're not making anymore. Real estate is a tangible asset where inflation induces both capital appreciation and rental income. Plus, it can be leveraged using mortgages to increase returns. And the secret hack of the rich that I mentioned earlier, we let inflation erode the real value of our debt, while inflation grows the real value of our real estate. Let me illustrate this because it's super important. It took me 30 years to learn this, and I'm gonna show you in 1 minute. If the average Joe were given $100,000 5 years ago, they would have likely put it in their savings account or some other low interest account because that's really all that was available at the time. Their $100,000 grew by 3% thanks to the little interest it did generate, but it lost 18.4% thanks to inflation. Their $100,000 would now only be able to purchase $84,031 of stuff. Inflation robbed them of $15,969, and they didn't do anything to deserve that loss. They just left it there like good savers do. Now here's what Wealthy Joe likely did. He used his $100,000 to buy a $500,000 income property. And since the house appreciated 26% over those 5 years to $630,000, but we have to account for inflation here too, reducing his appreciation by 18.4%, netting him 7.6% of appreciation, of which it grew his $100,000 by $38,000. A little better than the loss in that savings account, right? But there's more. Inflation, it's an equal opportunity money killer. The $400,000 he borrowed experienced the same 18.4% loss as average Joe's money did in his savings account, which means inflation, by way of increased wages, salaries, and revenues, paid off 18.4% of Wealthy Joe's debt, $73,600. When you combine Wealthy Joe's real estate profit with the inflation-induced debt destruction of his mortgage, he came out on top with a $111,600 gain in his wealth. Whether you're out there hunting for city center apartments or sprawling pirate islands, the right properties purchased in the right way can be an anchor of stability and a beacon of growth in stormy economic waters. If you're subscribed to the channel, you already know that and you know how to do it. When inflation sends others to walk the plank, you'll be sitting on a treasure chest. Pirate style. All right, the next step, think diversification. Just like, you wouldn't put all your eggs in one basket. It's wise not to tie all your investments to one country's economy. You see, when one market zigs, another might zag. And I'm suggesting going global. But like trying a foreign dish for the first time, they can be a bit spicy in terms of risk. So make sure that you've got the guidance and the appetite for it. But it is a smart play when your economy is experiencing inflation. Now you've got the cheat code for the inflation game. It's all about just positioning. And you might not get the whole avocado farm, but hey, a tree or two isn't bad while everyone else is out there pulling weeds. Thanks for watching. Take care.